Pips, lot sizes, candlesticks, support and resistance, trend lines, 8 videos of building blocks, all pointing at one moment. Actually placing a trade, not clicking randomly on a demo account, placing a trade with an actual reason behind every field on the screen. Let's walk through it piece by piece. Before you touch the trade ticket at all, 3 questions need answers. What's your reason? A bounce off support, a trend line holding, a clean setup, not a gut feeling. What's your position size? The lot size math from earlier in this series, based on what you're actually willing to lose. And where's your stop loss going? Decide that before you open the ticket, not after. If you can't answer all 3, you're not ready to click anything yet. Every trade ticket has the same core pieces, a buy button and a sell button. Buy if you think price is going up, sell if you think it's going down. A lot size field, where you enter the position size you already calculated, and 2 prices sitting side by side, the price you can sell at and the slightly higher price you can buy at. That gap between them is the spread you learned about back in video 6. Everything else on that screen is secondary. Those 3 things, direction, size, and the spread you're paying, are what actually matter before you go further. Your stop loss is not optional. It's the price where you're proven wrong and the trade closes automatically to protect you. Place it based on the chart, not on how much money you're comfortable losing. If you're buying because support held, your stop loss belongs just beyond that support, the point where your original reason for the trade stops being true. A stop loss placed for chart reasons might still get hit. That's fine. It means the setup failed, not that you did something wrong. A stop loss placed just to feel comfortable protects nothing. Your take profit is where you plan to close the trade for a win. A logical target is the next support or resistance level in the direction you're trading. Compare that distance to your stop loss distance. If your stop loss is 100 pips away and your take profit is only 50, you're risking 2 to win 1, a trade that's tough to profit from, even if you're right often. Beginners should look for setups where the potential reward is at least equal to the risk, ideally larger. If the reward doesn't justify the risk, it's not a setup worth taking, no matter how confident you feel. A market order fills immediately, at whatever the current price happens to be. Use it when the setup is happening right now and you don't want to wait. A pending order sits and waits until price reaches a specific level you choose, then fills automatically. Useful when your setup depends on price first reaching a certain level, like a trend line or a support zone. Neither type is better. A market order suits a trade that's already valid. A pending order suits a trade that will only become valid once price gets somewhere specific. Once the trade is placed, it becomes an open position, and you'll see something called floating profit and loss, the running total of what you'd gain or lose if you closed right now. It moves constantly, and that's completely normal. It isn't the final result, it's just where the trade currently stands. Resist the urge to close early just because that number turns slightly negative for a moment. You already decided your stop loss and take profit before you clicked buy. Trust the plan you already made and let the trade play out to one or the other. Let's lock this in. Know your reason, size, and stop loss before opening the ticket. Direction, lot size, and spread are what matter on the trade ticket. Stop loss goes where your reason for the trade would be proven wrong. Take profit should offer a reward at least equal to your risk. Market orders fill now, pending orders wait for a price. Floating profit and loss moves constantly. Trust your original plan. That's how to place a trade with an actual reason behind it, not a guess, a plan. In the next video, we're covering something just as important as any chart pattern, trading psychology, and why your mindset decides more outcomes than your strategy does. If this made your first trade feel less intimidating, hit like. It genuinely helps this channel reach more beginners. And drop a comment below. Did you place a demo trade using this process? Let me know how it went. See you in the next lesson.